Hey guys, hope you're doing well out there. It's time to catch up on the story of the e-commerce giant that is Amazon.com after they reported their Q1 results. We'll take a look at all the different business units this company has to offer, take a look at the all-important AWS segment, and see how sales growth are accelerating year over year. We'll then jump into the second quarter guidance provided by the company and see how that fared against estimates over on Wall Street. Jump into all the financials I think you need to know, and then take a look at the technicals. This one has been locked in an uptrend, really call it over the past year and a half, and there's really nothing in this report to tell you that that trend won't continue. So we'll highlight some levels where I think if you haven't entered shares of Amazon, where it would make sense to. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of Amazon down roughly 3.5%. That was in the intraday, as you have in the after hours, making up for some of those losses, up close to 1.5%. I've seen it up even 2%. But keep in mind, year to date, you still have the stock up close to 19%, and then over the past 1 year, up just a cool, calm 77%. So despite posting close to a $2 trillion market cap, and on the surface, this 43 times price to earnings multiple might look a bit rich, but consider the fact that this company is growing its earnings just absolutely explosively. And so that 43 times earnings multiple, certainly not wildly expensive if you were to ask me. Now, top line revenues came in at $143.3 billion. That was good for a 12.5% growth year over year. It did beat estimates on Wall Street by just a small $750 million. Keep in mind, that is actually a small beat, especially when you're posting revenues of north of $140 billion. In terms of EPS, that came in at 98 cents a share. Estimates were closer to 83 cents a share. So beat on both the top and bottom line. That is always good to see over at Amazon. In terms of their different business units, we'll get into this in just a little bit more specifically, but you have growth along all of their business units, as you have North America sales growing 12%, international sales growing 10%, and then the all-important AWS coming in at 17% growth year over year, posting revenues of $25 billion. This is now a business unit that's on track to do over $100 billion over the full year. So you have Amazon AWS business at a run rate of roughly $100 billion for the full year. You put a price to sales multiple on that close to 8, 9, maybe even 10 times. You get a $1 trillion valuation, likely just on AWS. And so you have the whole Amazon company itself valued close to $1.9 trillion at a market cap. And so there you go. Certainly not wildly expensive, especially when you consider that $25 billion business is growing at a top line clip of roughly 17% year over year. Also is wildly profitable when we'll get on to their statement of income. Now, before jumping into all of that, we also have a second quarter guidance figure right around roughly $144 up to $149 billion. That's on your top line revenues. Estimates on Wall Street at the midpoint were closer to $150.1 billion. So Amazon really coming in slightly lower on their top line guidance. Let's say the midpoint somewhere between $146 to $147 billion, call it roughly $3 to $3.5 billion underneath Wall Street estimates. That is actually a sizable miss on Wall Street guidance, especially for top line sales, and that would represent growth of just 7 to 11%. So when you have estimates on Wall Street for the upcoming quarter at $150.09 billion, and then the estimates for fiscal Q3 and beyond at 159 and then 188. Yeah, likely those future estimates might have to also come down by just a couple $1 billion as well. So that's something to keep in mind. On top of that, you also do have an unfavorable impact in the upcoming quarter on their top line sales of roughly 60 basis points. So some of that top line growth is impacted by foreign exchange rates. And then on top of that, in the first quarter that they just reported, Amazon did experience positive impact from a leap year. So their growth rates were benefited roughly by 120 basis points on that top line. So keep in mind, you did have a slight benefit in this quarter, and you'll have a slight holdback in the next quarter due to those foreign exchange rates. On top of that, they do provide guidance for operating income that is expected to be in the range of 10 billion up to 14 billion compared to last year's Q2, where they had operating income of right around 7.7 billion. So jumping a bit ahead, we see operating income in this most recent quarter came in at roughly $15.3 billion. That is a huge jump year over year, as last year you had operating income at right around $4.7 billion. So that is nearly a 3x on your operating incomes year over year. So when Amazon is guiding for operating income at the midpoint, so let's say around $12 billion, that nearly won't be as large of a jump next quarter as you had this quarter. So I think both of those things, a lower net sales guidance for the upcoming Q2 and then also slightly muted operating income guidance is contributing to those shares not really rallying nearly as much, because frankly this past Q1 was honestly spectacular over at Amazon. And so if you were to just look at the results from this most recent Q1, yeah, you'd be surprised that the stock isn't up higher in the after hours. Now, as we'll talk about a lot in this video, this quarter over at Amazon really is showing signs that this company is just now turning over to profitability in a major way, and that likely will continue in terms of bottom line profitability, and on top of that, just exploding free cash flows. And largely that's because they're basically driving a lot of efficiencies throughout their business. And part of that is to do with launching generative AI and really tools that help employees become more productive. And that's really what their intelligent Gen AI chatbot Q has done for internal Amazon developers, is that's made them nearly 80% more productive at their jobs. And with new features they're planning on introducing in the future, they think that's going to only continue to grow. So when you have Amazon employees becoming 80% more productive, yeah, a lot of that output will be flowing through to increase bottom line profitability. Now, in terms of the different business segments over at Amazon, we have the North America business, which is still, in my opinion, the bread and butter. That's what you think of when you say Amazon.com, and those sales came in at $86.3 billion. Keep in mind, this is not your holiday Q4 where sales tend to explode on Amazon. This is just your Q1, maybe has a little bit of a post-holiday follow through, but you still have sales growing nearly $10 billion on a year-over-year basis. And on top of that, your operating expenses not growing nearly as fast. Look, you still have a ton of fixed cost expenses over at Amazon, such as fulfillment, such as shipping, and the cost of goods. And so it's really hard to control those, but still Amazon doing a fantastic job. And that allowed your operating income to go up from close to $900 million up to $4.9 billion. So a fantastic jump on your operating income on the North American e-commerce side of things. On top of that, you have international business turning around to profitability, as you have sales at $31.9 billion, offset by operating expenses of right around $31 billion. And so you turned from an operating loss last year of $1.2 billion, now sitting at an operating income of close to $900 million. So on top of the North American e-commerce business continuing to chug along in profitability, you have that flip to profitability on the international business as well. We saw this in their Q4 as the holiday quarter, Amazon did post profitable operating income on the international e-commerce side. It seems like that is continuing to follow through in the Q1. On top of that, the cash cow for this business remains AWS, as you have just exploding net sales up 17% year over year, up to $25 billion. And then on top of that, look at this, your operating expenses on that AWS side actually ticked down from $16.2 billion down to $15.6 billion. And so despite growing your top line sales by roughly $4 billion, your operating income actually grew faster at $4.3 billion. That is just spectacular to see. And so when we see Amazon developers becoming 80% more productive at their jobs due to Gen AI being really used internally, I think that is a fantastic use case for it and is really showing through in their numbers so early on, which is again quite impressive if you were to ask me. Now, in terms of the different segments, we saw North America growing 12%. The impressive thing here is all of their business units are not just expanding sales, but the growth rates are actually accelerating on a year-over-year basis. You do have North America sales going up 11% last year. Now that's up at 12% growth rates. The international business was growing at just 1% last year. Now that's up to 10% year over year. We see even with AWS growing faster this year, up to 17%. Last year, you were growing at just 16%. And so along the board, you have accelerating growth rates on the top line revenues, despite your revenues coming in close to $140 billion. That is a staggering figure that is just continuing to accelerate on those top line sales. Just impressive to see what Amazon is able to do. Keep in mind, some of these accelerated growth rates are due to the fact that you have that leap year benefit accounting for in this Q1. But as we look ahead over the subsequent few quarters, this company really is expected to continue those roughly 11 to 12% growth rates throughout this year and then on to next year, basically expecting the same growth rates on that top line. So this company really not expected to slow down anytime soon on those top line sales, really expected in those low double digits. Certainly impressive to see over at Amazon. In terms of the statement of income, we see those net sales expanding roughly 12.5% year over year. And then, as we said, you have some fixed costs over at Amazon. So your cost of sales really growing, not nearly as fast as your net sales, but still having to grow year over year. On top of that, you're still having to fulfill a lot of those sales in Amazon warehouses, so that continuing to grow, call it a 10% clip. But just look how impressive their controlled costs are on the technology and infrastructure, as you have tech and R&D spend actually go down year over year from 20.45 billion now down to 20.42 billion. So despite growing your top line sales close to $16 billion, you actually spent less on your technology and infrastructure, which is again translating a lot of that into AWS operating income. On top of that, sales and marketing ticking down to $9.6 billion year over year, and SG&A also coming to tick down right around $2.7 billion. So this company really controlling costs every single place they can outside of cost of sales and fulfillment, and that really is showing through as their operating income explodes from $4.7 billion up to 15.3. On top of that, this company does have this other expense line, and that contributes to their investment in Rivian, which is actually down roughly $2 billion in this most recent quarter. Last year, same time, it was down roughly $500 million. So keep in mind, if this company didn't actually invest in Rivian, they would actually be posting far significant net income at least. And so Amazon realizing that net loss on the Rivian investment, similar to a lot of retail investors, if you were to ask me. Now, despite that, you still have your net income just close to 3xing year over year, as it came close to $10.4 billion. Last year, you were at $3.2 billion. So still an explosion in your bottom line profitability, largely due to leaning out the business, controlling costs while continuing to expand on your top line sales. So from an income statement, this is probably an A+ income statement. I'd say actually an A income statement, simply because you do still have that net loss on the Rivian investment. Now, from a balance sheet perspective, all things looking good over at Amazon. They're sitting on roughly $72.8 billion worth of cash and cash equivalents. On top of that, another $12 billion in marketable securities. This is a quarter over quarter picture, so not really a whole lot of change over the past 3 months over at Amazon. They still have a ton of property, plant, and equipment that came in at $210 billion. Did tick up year over year. We'll see this company is continuing to invest heavily in CapEx spend on the property and plant side. So in terms of all current assets, that came in at $164 billion. That is balanced out by close to $153 billion in your current liabilities. Part of those is actually unearned revenue, so not really a liability per se. In my opinion, just some deferred revenue that will come down the road for Amazon. This company does still have a fair amount of long-term debt. You see close to $57.6 billion is ticking down year over year, as this company really has no use for its cash, I would say, as you have the FTC really on Amazon's back, really preventing them from doing any significant, or really, in my opinion, any insignificant acquisitions as well. And so with all this cash, they can't really go out, pick up any other companies. So they really have to continue to invest either back into themselves or pay down a little bit of debt. We see this company not really want to do share repurchases all too aggressively. I think Amazon's still early in its profitability stages, but at some point I do see this company following in these footsteps of your other mega caps like a Google, Meta, Salesforce, and Apple and Microsoft, and eventually I think will come on to pay a dividend. I think you're still a ways away from that with Amazon though. Now you have your net income, as we said, $10.4 billion. You bring that down to your statement of cash flows. Again, year over year, just a massive jump in your net income. You get to add back close to $11.6 billion of depreciation. That's on your Amazon warehouses and equipment, a large amount over at Amazon. On top of that, some stock-based compensation growing, but not nearly as fast as your net income. And so that's something we like to see. And you get to operating cash flows of close to 18.9, call it $19 billion over the past quarter. You see last year you were sitting at just $4.7 billion in operating cash flow. And so, like we said, not a whole lot of use for that. Amazon is spending close to $15 billion of that in terms of property, plant, equipment. So really investing back into themselves, investing in their infrastructure and building out those warehouses, continuing to invest in robotics, especially that will help efficiencies in their warehouses. So a lot of that operating cash flows goes into CapEx and leaves right around $3 to $4 billion in free cash flow, from which they don't have a ton of use for that. They do pick up some marketable securities, pay down a little bit of short-term debt, and then pay down a little bit of long-term debt as well. So Amazon not having a ton of use for the cash outside of just investing back into themselves. You see they're not really doing that share repurchase, as that has stopped over the past year. All things considered, the cash flows, balance sheet, and statement of income over at Amazon over this past Q1 looking absolutely stellar, basically in line and continuing to show that profitability is just ramping, especially on their e-commerce and both on the North America and international side. And then along with that, the efficiencies this company drove in their AWS business continues to just absolutely shine through. Now, certainly wouldn't blame Amazon for stopping their share repurchase, as you have the stock up close to 77% over the past 1 year, has been locked in a steady pattern of higher highs and higher lows, trading up right around call it $178 flat in the after hours. Now, you probably can pick up shares of Amazon on really any major pullbacks in this uptrend. Really, any pullback in an uptrend is, in my opinion, a fantastic buying opportunity, especially for a stock like Amazon. Your first level is probably somewhere between, call it $165 up to $170 a share. That is your first entry point into shares of Amazon. Really not a huge dip, but certainly if you have no position, I think this is a stock that is a must hold in any portfolio. And so that is probably your entry point into Amazon. Certainly if you have a deeper pullback, the first level probably of support I would see is closer to this $153 range. That is where Amazon has reversed in the past, and I can see some levels of support materializing at that point. And then anytime lower, you can get Amazon in the 140s, 150s. I think that is an easy no-brainer of a buy. I think the muted guidance for the upcoming Q2 will probably keep a little bit of a lid on this stock, so I don't expect this one to kind of break to the upside like you had with Google or you had with Meta in their previous earnings, and will probably trade and chop sideways for the next little while. Like we said, any major pullbacks in shares of Amazon, I think that is your opportunity. First level being closer to this $165 level. That was my take on shares of Amazon. A terrific quarter, if you were to ask me, and the upcoming guidance just coming in a little bit shy, but nothing to be overly concerned about. This company is firing on all cylinders. Profitability is just ramping up. AWS is continuing to be extremely strong, and their e-commerce business on that international side, once again, turning to profitability is a fantastic sign. I think that is just the start for this business. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.